Hi, Kelly Eckholt here to update you on the key events of the week. So this week I want to focus on the key messages of our newly released economic overview. The theme of the overview is turning the corner, and that reflects our more optimistic view for how the economy is going to proceed this year relative to the pretty rough year that we had in 2024. We're anticipating that economic growth this year is going to be 2.5%, rising to about 3% next year. There's kind of two key drivers of that improved growth outlook. The first is that export commodity prices are pretty strong right now, and we think that's going to especially support growth out there in the regions as we go through the year. The second big impact is going to be the impact of the lower interest rates that we saw late last year that are going to continue into this year. That's going to support the housing market, it will support household spending and ultimately businesses. We think that the OCR is going to fall by 50 basis points next week when the Reserve Bank has its meeting, but after that we think they're going to slow down the pace of easing. We think that inflation is going to rise a little bit this year as the impact of the weaker exchange rate flows through, but after that it's going to drop back closer to 2%. I guess a real fly in the ointment right now is the impact of the global trading environment for New Zealand. Right now we're taking a fairly optimistic view and saying that the impact of global tariffs is not going to be directly important for New Zealand or particularly long lasting. But there's certainly some downside risks associated with that view. If those downside risks eventuate, then we think that that will be primarily felt through a weaker New Zealand dollar. Our base case for the New Zealand dollar is that it ends 2025 around 54 US cents. But certainly if those downside risks emerge, then we could see weaker outcomes in that. I'll be back to update you again next week.